Hey guys, how's it going? Value Venture Investing here today. So today we're talking about Air Canada. Just recently here, Air Canada has released their earnings, and those earnings are for Q1 2022. So we're gonna do a quick video today, get you guys up to speed. Kind of interesting times, what's going on right now. I know things have been out like a little rough out there lately, guys, so I hope you're hanging in there okay. But these earnings, there's some good, there's some bad. I'll give you my thoughts on them. So we're gonna go through the earnings. I've laid it out here, Q1 2022, as well as the last quarter, which is Q4 2021. And then of course, I've done the year-over-year comparison because this Q4 2021, this was a holiday quarter. That's a pretty strong quarter, and it's good to do those year-over-year comparisons. So year-over-year, it's actually been pretty phenomenal. The stock itself, over the last several days here, initially didn't like this news too much, but then it's been kind of range bound here again. So not a heck of a lot going on. So we're going to go through these results. Don't forget to like the video, guys, and subscribe. Really helps the channel. So the big thing here was the passenger revenue, and on a year-over-year basis. So this was over $1.9 billion. And when you compare that from a year ago of $395 million, that's that's over 3.5 times. So that was kind of the news that came out. Massive beat. In terms of that year-over-year basis. But when you look at last quarter, we were over $2 billion. So it's actually a bit of a decline from that. So I think that's kind of maybe why the stock responded the way it did a little bit. Also, cargo revenue was $398 million, and that dropped from $490 last quarter. Now, they're talking on the conference call that that's because they're kind of they're seeing demand come back, so they're transitioning rather a lot of their aircraft back into passenger revenue. So that's why we've seen this drop. But even year over year, it was 281 million, and it's almost 400 million right now. So that's something we'll talk a little bit about more, but that's a section that I've been very interested in. Other revenue was 258 million. Again, so that beat last quarter and just utterly destroyed the year over year. So the total revenue is about 2.5 billion, getting close to 2.6 billion. That's huge on a year over year basis. But again, a little bit of a drop from last quarter. So that's why we saw a little deeper of a loss of 974 million, whereas only 493 million last quarter. But again, the year over year of about 1.3 billion, they're really pairing those losses. So it's nice to see that year over year an improvement. EPS was negative $2.72. Again, much worse than last quarter, but year over year, same sort of thing. And cash is something they didn't talk about a lot. So I went in and I looked. It's about 8.5 billion, almost 8.6 billion. So it's dropped a little bit, but that makes sense. But we're still in a stronger cash position than what we saw a year ago. And on the conference call, they talked about actually needing significantly less than this. And they have a bit of an area where they're like, oh, they expect things to be a little bit worse. If things get worse, how much cash they're going to need. And I think, maybe leave a comment down below if you know, guys. I think it was around 6 billion or something like that. So they got ample of that. So now we're going to go through some of the insight I got on the conference call, and we're going to go specifically a little bit more into their financials if you guys want to stick around for that and get a little bit more insight. So of course, one of the reasons that they said their revenue was down was of course because of the new variant. How much of an effect did that have on it? They said it had a pretty significant effect, but in the back end of the quarter, that's starting to dissipate. So going forward, hopefully we won't see that excuse. Hopefully we won't see that impacting revenue, and they're very bullish going forward. In fact, they're saying this summer, they're expecting 90% of the pre-pandemic capacity. So when you think about that, that's huge. So on this conference call, they talked about 2019 a lot because that was a very strong year, and even the stock, you saw it going up into 2020. They're expecting to go 90% there. They're going to be restoring 41 North American routes. So as I mentioned, they're starting to reach the March 2019 levels on many metrics. One of the questions that was asked on the conference call was, do you think you guys could exceed that? They didn't like saying that they think they would exceed that this year. They said probably not. But what they said is Q1, Q2 of 2023, perhaps. That's one of the levels we could be seeing. So early next year. I know it always sounds like next year. And that's one thing I'm not 100% sure of right now. But yeah, that's some pretty good news. That's some pretty fantastic news for a stock that hasn't actually moved that much. Again, one other interesting thing is they said they had 100,000 passengers in one day. And that's the first time they've done that in 2 years. So you're really seeing that passenger revenue come back. And if we reach 90% this summer, we're going to see some solid numbers. Again, about cargo, they're saying they're expecting their cargo to weaken. Again, that's because they're transitioning right now. They're trying to get back into passengers. They're opening up routes. Business travel isn't as strong, but they're still seeing positive momentum in that direction. But the good thing is, I was a little bit worried about this because I talked about it in my other videos how I really want to see this increase. Like, I think that's a good competitive advantage, especially the way it's going right now. But they're still expanding. They're going to be bringing more into their fleet for that. They're opening up new routes to Europe, stuff like that. So keep an eye on that going forward, but they expect next quarter for it to weaken. So that's something to keep in mind. And maybe that weighs on the stock a little bit as well. Again, with all the inflation going on, which was to be expected with all the money printing and stuff like that, they're still not doing any hedging. They're saying it's too complicated to hedge this jet fuel. But what they also did mention was that their competitors are not hedging either. So this is probably a good news, hopefully for the shareholders, but maybe not for the consumers. They said that they can probably make up for this in prices. So expect maybe those fares to go up. But I mean, with inflation, we're seeing everything go up. So they're saying that these jet fuel futures are just, at record levels. However, they do expect it to normalize. So whether or not that happens this year, they think it's going to be, I think this summer they said it's going to normalize around $120 or $130, somewhere around there. We will see. So now let's take a look at their financials right now. So I didn't find anything too particularly interesting in this. First, looking at the balance sheet here again, cash and cash equivalents over $3.1 billion, short-term investments over $5.4 billion. So we got the total cash and cash equivalents of $8 billion, $8.5 billion, almost $8.6 billion there. Again, I compared their total assets to their total liabilities. Still pretty on point here. Total assets, $29.7 billion. Total liabilities, almost $31 billion. In terms of their income statement here, I really like how they break this out and they show you a bit more. And he actually kind of went through half this on the conference call and explained quite a bit of it. Operating revenues here, we got passenger, cargo, and other. We went through this, but it's nice to see again on their financial statements here year over year, 2.5 billion versus 729. That's a massive increase. So that should give anybody positivity going forward. Operating expenses here, first one, aircraft fuel. Of course, that's not to be expected. $750 million versus $200 million. So that's pretty huge. But also you got to look at the amount of passengers, amount of routes that they've actually increased. So you're going to see that go up. But a huge component of that, of course, is the price of jet fuel, which has been a crazy increase. So that's something to watch going forward. Wages, salaries, and benefits. Of course, this is to be expected, 707 million versus 528. But of course, they're bringing staff back online. They're ramping up, so that's to be seen. That's to be expected, right? Aircraft maintenance. This is something they mentioned. This has went down significantly. This is something that they've been working on. They basically have, I don't know exactly who this company is, and maybe if you guys know, leave a comment down below. They've got a new contract with a new company, so they're transitioning and hoping this is going to be lower. This is part of their cost cutting. Only $26 million versus $150 million. So that's a huge increase there. So their operating loss was $550 million versus over $1 billion a year ago. So that's really nice to see. In terms of their non-operating expenses here, nothing too exciting. It's about $264 million in their non-operating expense here versus 338. So the net loss for the period was $974 million versus $1.3 billion last quarter. So an improvement there, but we're still deep into these losses. Diluted loss per share, $2.72 versus $3.90. Quickly going through their statement of cash flows here, it's really nice to see this net cash flows used in operating activities. It's positive $335 million. So they talked about this a lot, that they're seeing a lot of operating cash flow going on here versus 888, almost $900 million that was used, that was a negative operating cash flow a year ago. So huge increase there. In terms of their financing, what they did with their cash here, proceeds from borrowing, you can see here that they borrowed less. Of course, they've cut off that line, revolving line of credit with the government. They're borrowing less here. They also had a reduction of long-term debt and lease liabilities. So that shows you there how they're cutting that down as well. In terms of investing, I found a little interesting that they've actually invested $972 million in short and long-term investments. versus actually selling and gaining 994 million a year ago. So that shows you the optimism in the company. So that gives us a net cash flow used in investing activities of about 1.2 billion versus having a positive 731 million a year ago, of course, but that's because of the investments they've been making. So the cash and cash equivalents at the end of the period were 3.14 billion versus 3.278 billion a year ago. So overall, I mean, it was a pretty good quarter. I can see why the stock is responding the way it is, because we're still not back on track. However, when you look at this over a year basis, it's pretty phenomenal growth. So I think the real proof in the pudding, if you will, is going to be the next couple quarters. I've been getting a little sick of the excuses that always, if I recall in the last couple conference calls, I could be wrong. I think they were saying like, oh, it's always next quarter or next year, but it still hasn't really panned out. And so maybe investors are getting a little bit frustrated. Of course, we've seen these new variants come and stuff like this, right? But I want to see the proof in the pudding, right? They're doing well right now. However, going forward, this is going to be kind of crucial to see if we have another variant or anything like that. I mean, things might change, right? But the next couple quarters are going to be crucial. So that's going to be something to watch. Of course, I'm still holding my shares. Stocks hasn't done that much, really. I still expect this to recover at least over the next couple of years. So let's see what's going to happen going forward. Love to know if you guys own shares, what you think of this quarter. Don't forget to like the video and subscribe, guys. Again, it really helps the channel. And that's going to be it for today. I'll see you in the next one.